Hi there traders, in this short video we will have a look at probably the most important economic factor, which are the interest rates. For traders and investors, interest rates of certain country is an alpha and omega of evaluating countries' current economic and monetary status, and it serves to distinguish the investments and money flow into or out of that particular economy. Other major fundamental news that can impact currency markets include financial crisis, political events, or geopolitical disorders that are random and can occur unannounced at any time. Interest rates are being decided and announced by central banks. Central banks or reserve banks are the financial institutions that oversee the operation of the banking and monetary system within their particular economies. Monetary policy is the main tool that central banks use to control interest rates and currency values. The mandate of all central banks is very similar, with a focus on low inflation, currency stability, economic growth, and prosperity within an economy. The interest rates that are being decided and announced by central banks are the rates for which the central banks lend financial capital to investment and commercial banks. Then the commercial and investment banks usually pass similar rates and conditions to consumers as well. That's how the big money flow of borrowing and purchasing is regulated within an economy. There are different types of interest rates being used by many economies around the world. The Lombard rate is for short-term liquidity loans to commercial banks. Another rates are called repo rate or discount rate. In Canada, the main interest rate is called overnight rate. In the United States, it's federal funds rate. In Eurozone, it's main refinancing rate. In the UK, it's official bank rate. In Australia, cash rate. And in Switzerland, it's LIBOR rate. LIBOR rate actually means London Interbank Offered Rate and is being used by Swiss National Bank. The rate decisions are usually priced into the market, as central banks often give hints for their monetary policy directions. The final interest rate is being decided according to the other macroeconomic indicators. A general thumb of rule says that if there are inflationary pressures in an economy, the central bank inclines towards raising its interest rates. The higher interest rates are attractive for investors as they seek to gain financial benefits from their investments. Raising interest rates is a tightening policy designed to slow down spending and to reduce inflation. Conversely, a cut in the interest rates means that more money is available for consumer spending, which encourages more borrowing and has an expansionary effect and a positive impact on economic growth. An interesting site to check the current interest rates of many economies is Trading Economics, where you can compare a list of countries and their current economic situation. On this site, you can just click on the interest rate and the countries will be sorted from the highest rate to the lowest. This nice comparison can tell you how each economy is doing and how attractive it is for the investors. From traders' perspective, if the economy is doing well and the inflation is higher than the central bank target, then it is probable that the central bank might increase interest rates. If they do so, the currency value also goes up. On the other side, if the central bank goes into a cutting rate cycle, then the currency value goes down. This is the core understanding how traders can capitalize on the market moves. Let's switch back to Forex Factory. And on the last note, please bear in mind that any significant deviation in current reading compared to the expected figures and also compared to the previous print, including correction, can have a significant market moving potential. There is an increased volatility and a low liquidity in the markets on the targeted currencies during these scheduled releases. It is highly advisable to be very cautious while trading and to have a proper plan and a maximum control of your positions. That's about it for now. Thanks for your attention and remember to trade safe. Cheers.